Hey everybody, Economic Ninja here. I want to talk to you today about the University of Michigan's sentiment survey that just came out. And I'm not referring to July's numbers because that was a full month. What I'm referring to is actually a story out of the hedge, and I'm going to briefly go over it and talk to you about how important I believe it is that we're actually going to be entering a deflationary period here pretty shortly. We're going to see it a lot in the news. But what's going on is essentially in July, sentiment from the University of Michigan's survey showed a slump, all right? Consumers are feeling that we're not going in a good direction as far as the economy is concerned, and so they're starting to scale back purchases. And it looks like University of Michigan actually did some preliminary numbers for the first week and a half or so of August, and it's actually coming back very bad. And so right now, the survey with the headline is plunging from about 81.2 points to 70. And to give you an idea, put it in perspective, that is weaker than the April 2020 crisis lows. Now, in April 2020, everybody was in a lot of despair. And I gotta have some notes here. I'm gonna forget the numbers. I don't want to get you guys the real numbers, but in April 2020, that's when the stock markets were correcting huge. Crypto was crashing. Everything was crashing, actually. Paper, gold, and silver was crashing. Everything, because everyone was like, oh my gosh, we've never seen anything like this in recent history. This is not going to be good for the economy. People like me were just, picking up assets hand over fist, and I'm sure some of you were too. But the point is that the consumer was, it was just fear, uncertainty, and doubt, right, that it hit the market. Well, to give you an idea where we're at right now, as of the first couple weeks of August, we are now below those numbers, okay? Now, it said, let me see, I'm looking for numbers right now. Okay, so not only are we worse than 2020, but it says right now, we're also worse than the depths of the Great Recession, which happened in October of 2008. So we're above 20%, negative 20% drop, and in the sentiment rating. And to give you an idea, April 2020 was a negative 19.4%, and the recession, the Great Recession, October of 2008, was negative 18%. So to sum that up, people are very afraid right now. There's fear in the markets. We are going to probably start seeing that in certain actual markets where we're going to start seeing food purchases increase. We're going to see stocks possibly sell off. I can't, I don't have a ball, a crystal ball in front of me, but what I'm telling you is that people are getting that gut feeling right now that something's bad, and they're slowing their spending. So now I'm going to explain the deflationary purpose. The dollar whippet theory is my thesis on where the economy is headed as far as going from inflation to deflation to hyperinflation. And what I believe we're about to see this fall is a deflationary period, and this is going to come two different ways. We've already seen it in consumer credit. We've seen Wells Fargo pull back a large chunk of their business being personal credit lines. And we've seen there are credit card companies right now that are drastically cutting the available debt that they have originally, given to people. The credit card limits, they're cutting back on that. They don't want to see people running their credit card bills up because the banks are fearful that you're not going to be able to pay it soon. And, the truth is we're just not seeing wages catching up with inflation right now. And again, you have to look at who you're getting your inflation data from. Is it from the government that tells you, oh, don't worry, inflation's only 5%? Or is it the grocery store that's telling you, oh, your grocery bill just went up 15, 20%? The facts are that government numbers are skewed, and they always are. People tend to forget that. This is also the government that told you, don't worry, in 2006, there's no mortgage crisis. And just so you know, it's impossible. This is coming from Ben Bernanke, the head of the Fed, so I guess it's not the government, it's just a private central bank, saying that, don't worry, homes can't crash all at the same time. Were they right? No, they were telling you the absolute false narrative. And it's really important who you get your numbers from, right? So the facts are, right now you have institutions that are scaling back their lending in the market, which is going to create deflation, because that's less dollars that can go out and chase goods that are going to increase the price, okay? So a lot of you are probably cheering, and that is a good thing, right? But now you see consumers scaling back their purchases. And I'm telling you, as these numbers continue to come out worse and worse, and I don't think this is the beginning. I'm sorry, I don't think that this is the end of these numbers. I think you're gonna see more and more fear hitting the market. You need to look at that and take that in and go, okay, well now how do I make this into an opportunity? Well, one way is when people stop buying golf carts and PlayStations and going on vacations, that means all of those things become cheaper because the companies that produce these goods and services still want to produce goods and services so that they can stay alive, so they have to lower prices. And so going into the future, as we see deflation start to rear its ugly head, which isn't good for the wealth effect, and by and large, as people start seeing their wealth either slow, the growing slow, going into stagflation and stopping and reversing, they start getting in fear, so they start liquidating things. And I'll tell you, honestly, in 2009, I made a killing buying up people's stuff and then reselling it. And I'm gonna do that again, but it's on a much larger level. So there's a lot of positives in this. The thing that I wanna warn people with is I think personally it's a good time to stop spending money and to do what these numbers are saying and just sort of scale back, Don't move to cash. You don't need to sell your stuff right now. But yeah, if you got extra stuff to sell, I'd get ahead of the curve before everybody else starts selling their stuff. Raise some cash and then buy their stuff really cheap and make a killing, there's some purchases that I'm quite frankly waiting for because why would I want to pay a hugely inflated price for a fancy car, when I know those prices are about to come back, especially on the heels of a massive move in brand new cars that are about to hit dealerships. And that's a whole nother video, actually, I'll have to talk to you guys about. I think I did, actually, and should you buy a new car right now? So right here, it says right here, the inflation expectations have sent bad buying conditions expectations to record highs across all segments. So they're telling you right now, the inflation expectations, there's a lot of people that are expecting higher inflation in the future. That's producing bad buying conditions all around the globe, technically, because people are going, why would I, they know what's coming. They don't, there are people that are buying right now out of panic and fear that certain things are going to be worth more. We saw that in lumber, but then you saw the flip side of that collapse too. So I want you guys to think a lot more, much broader. I want to pull you up into the atmosphere, the stratosphere technically, and really look at the world and look at the sentiment of buyers. And I want you to look at these numbers, and I'm going to link this story below, and I want you to really take it in and go, should I be part of the herd right now that's still out buying ahead of the game? Or should I be sitting back and going, I'm seeing that people are starting to get that gut feeling. They're going to start slowing their spending. Banks are already slowing their lending. Let me pull back right now. Let me just wait, be patient, be meek. Even though I've got money, I could go out and buy that fancy car. I could go out and buy that new house. But you know what? Let me practice being meek, having power and authority, but deciding not to use it, and just wait. And there's some good deals coming. So I just want to show you this. This is great intel. I'm going to link the story below. Like I said, I want you guys to look at it. But remember, this is a pre-check at August numbers. And I believe you're going to see when the full month of August comes out, I think you're going to see some really neat fireworks. All right, guys. With that being said, I thank you so much for your time. The Economic Ninja is out.